Okay, so if we continue on here looking at section on journals that we need for payroll transactions, and it's just giving some details here of, look, key things that you're going to need to be able to identify in the assessment, okay? And so key figures you'll need to work out and what they consist of. First of all, then, the total wage expense to the business. Now, this is the bit that we were looking at previously in the, right, the cost to the business of employing someone, i.e. the total wage expense as far as the business is concerned of, and what it would cost them, is the three elements. Number one, the gross wages from staff. Okay, yeah, so the gross wage of staff, so the total amount of basically someone's salary. So you need that gross wage that will be earned by the staff. Remember, coming off that gross wage, there will be things like PAYE, employees' national insurance, employee pension and stuff. So there may be lots of deductions from that, meaning that the company has to pay out that gross wage to 2 or 3 or 4 different places or sources. But ultimately, the gross wage is the cost of the company. On top of that, the employer national insurance. Okay, yeah, remember any employee bits will be wrapped up in gross wages and sorted out. So it's the employer national insurance contributions are an extra cost on top, and the employer pension contributions, again, that's the extra bit on top of gross wages. Okay, so that will be your total wage expense to the business. It's those three elements you're looking out for. Now, the other thing we may need to identify is how much will be owed to revenue and customs. Okay, so what do we need to pay across to revenue and customs? So these are all the taxation elements, okay, which what basically do with this, the plan is that it turns the business into tax collectors on behalf of the government. Okay, and we will basically as a business make tax deductions from staff and hand them over to the government on their behalf. Okay, so any income tax or PAYE that has been deducted from a staff member from their gross wages, okay, we need to hand that over to Revenue and Customs on behalf of the individual, on behalf of that employee. Exactly the same thing with the national insurance contributions that are the employee part. Again, we will have deducted that from their gross wage, okay, and only hand over to the employee the net wage. So we will have taken that off them as well, okay, but again, as a business, we now have a responsibility to hand that over to Revenue and Customs on their behalf. So those two bits will have been deducted from the employee, and that's what you would see there on a pay slip. And the other thing is any employer national insurance contributions as well. Okay, so anything to do with the tax or the national insurance, fundamentally, okay, it does not belong to the business. Okay, it's just you being as a business being a bit of a tax collector and making sure you hand those amounts over to Revenue and Customs. Okay, in terms of what's there. So that's what would be owed to HMRC. Okay, so you need to be able to calculate that. And the other thing you need to be able to calculate is what's the actual net wage that a staff member would receive. Okay, so if we know their gross wage, we then need to think, okay, what will be knocked off that gross wage before they actually receive their money, and therefore how much money will they get. Okay, so what we're looking at here is you start with the gross wage for your staff. Okay, that's the salary. Really importantly, look, it's a less. Okay, you are then going to subtract these following items. Any PAYE, okay, and income tax, that will need to be deducted because that's taken off their someone's pay and handed over to Revenue and Customs on their behalf. Any employee national insurance contributions, exactly the same thing. Okay, you are going to take that off the staff member's gross wage and hand it over to Revenue and Customs on their behalf. And then any employee pension contributions, because again, what you're going to do here is deduct it off the employee's salary and now hand it over to the pension company, but again on their behalf. So those things need to come off. Now, so there could be other things, if there were loan repayments, give as you earn schemes, stuff like that. So that you tend not to see those consistently come up in the assessment. I mean, it's possible they could do, I suppose, but certainly tax, national insurance, pension, pretty much everybody has that coming off. Some of the other things that gives you the loan bits are far fewer that people have those, but these are ones that consistently pretty much every single staff member would have. Okay, so they're the key areas that you need to be able to sit down, work out, and calculate. Okay, basically in any assessment. Now we then go through is just looking at accounting entries for this, okay? And this is where what we do is we tend to whack everything through what's known as a wages control account. Now the idea is, okay, that the wages control account should ultimately clear itself off, okay? And so we kind of stick everything in there, kind of journal it in, and then journal it out again, so it should all clear off. So we ultimately end up with things where we want them to be. So, starting off then with gross wages. Now, the point is, this is the cost to me of employing somebody. So, let's just say here the gross wages are £8,000. So, I will debit my wages expense account. Okay, that hopefully makes sense. It is an expense to the business. What we will then do, the other side of that entry will stick in a wages control account. Now, the reason we do that is that I know, okay, there are numerous other items that need to come off that gross wage. So it's just a way of controlling, okay, if that's the gross salary that belongs to everybody, have we effectively deducted everything properly? Okay, so I've got my gross wage sitting there in an expense. Lovely, happy with that. Okay, and the other side goes in this control account. What I can then do is making sure that all the deductions stack up here. So first of all, PAYE, the income tax bit, okay? Now, it's going to come off someone's gross wages, so what I'm going to do is go, right, debit that wages control account, start bringing it down. What needs to happen with that? Well, if I deduct tax from somebody, okay, fundamentally, I need to make sure I hand that tax over to Revenue and Customs on their behalf. So what I'm going to do is I'm going to create this payables account, okay, because ultimately that PAYE, you know, I've taken it off the individual, but it belongs to Revenue and Customs. It's their tax, okay, which we need to hand over to Revenue and Customs. So I'm going to debit the wage control there and credit that payables account. The employee's national insurance, I'm going to do exactly the same thing. Okay, I'm going to debit the wages control account, reduce that down, and again create a payable for this, because again, ultimately, that employee's national insurance you're taking off there doesn't belong to the employee, certainly doesn't belong to me as the business, it belongs to Revenue and Customs. Okay, so again, we're going to create the payable for it and hand that over. We would then deduct any employee pension contributions, okay? So take the 400 quid off there. So again, debit, reduce that wages control account, okay? And this time it's like, well, okay, we've deducted pension off this staff member. Who does that pension belong to? Well, ultimately, we need to pay it across to whoever the pension provider is. So again, I'm going to create a payable for that and say, okay, this money belongs to the pension provider. Okay, so it's, until I hand it over to them, it needs to sit there as a liability. Okay. Now, having deducted tax, national insurance, pensions, okay, I then get left with a net wage figure, 5420, okay, which is what I'm going to physically pay out to staff. So again, I'm going to debit the wages control account now, okay, to reduce that down, and credit the bank, okay. This is the money that actually will physically, at the end of the month, will leave my bank account and will go to the employees, okay. Now, the idea is that, look, that initial bit we stuck in the wages control account as gross wages should now get cancelled out by all these other items, so that the net balance, okay, that just stands for a contra, and now the net balance on wages control equals 0. right? And that's the whole point. It was like, look, here's a gross wage. Fine, let's recognise the expense because it's the cost of employing the staff member, and let's credit a wages control account. It then just allows me to make sure that when I deduct the PAYE, the national insurance, the pension contributions, and I pay out the net wages, I haven't made a mistake, because the idea is that wages control account now should clear off down to zero, and that just lets me know that, yeah, I've done everything, everything's in the right place, okay? And so that's great, okay? That should effectively clear off at that point. Now, other things I need to do, okay, so some other entries I do need to do. The employer's national insurance. Okay, well, look, as far as I am concerned, that employer's national insurance is like an extra cost of employing an individual. Okay, so I'm going to debit my wages expense account with that amount, okay, because effectively it's just an extra cost based of employing someone. And we'll, again, credit a wages control just to make sure I know where it is and where it's sat. And employer pension contributions. Well, again, as far as I'm concerned, that's like an extra cost of employing a member of staff. Okay, it's an expense to me as a business. So again, I will debit that wages expense account. Okay, because again, record it's an expense. It's an extra cost of employing someone, and credit the wages control account. Okay, so fine, it's where we put the other side. That's fine, but obviously sticking it in the wages control account, okay, isn't where ultimately it needs to be. I need to think, what do those two entries for wages control really relate to? Well, the whole point is the employer's national insurance element, the 830 quid there. Actually, what do we need to do that? I need to hand it over to Revenue and Customs, okay, so we can debit wages control and credit HMRC payable account, okay, so again, that will cancel out, okay, that wages control. Okay, so fine, I have dealt with the employer's national insurance part properly there. And then in terms of the pension contributions, well, again, debit my wages control, okay, and actually create the liability. Okay, create the liability there for the pension payable, because I need to hand that money over to whoever the pension company is. Okay, so that's the whole point. What I'm trying to do there is just make sure that ultimately, again, all these balances, okay, on the wage control account do actually cancel themselves out. Okay, now they then do go through actually looking at that. Okay, in terms of what that looks like in the general ledger. Okay, and so you can see here that in the actual wages expense account, i.e. the cost to the business, we do end up with the three things we said should be there as the cost of the business. Okay, we do end up with gross wages, employer's national insurance, and employer's pension, okay? And that was what we said previously. That would be the total cost to the business, okay? If we then have a look at what's sat here in HMRC payables, and we said, what would we expect to see in a that needs to be paid to HMRC? And we said, well, there should be the PAYE tax. Well, that's now in there. There should be any employee national insurance. Well, that's now in there. And we should have any employer national insurance. That's now in there. Okay? So we've got that. So that's absolutely fine. Okay? The other thing that's just there is this wages control account. Okay? Now, if we actually have a look at this, and the idea is, if I now went and basically add these amounts up, so if I look at that and literally add up both sides here and see what happens. If I add up the debit side there, I get 9430. And if I add up the credit side, I get 9430. So the whole point is that there is no balancing figure on that wages control account. It is exactly that. It is used as a control to make sure that everything that goes into it goes out of it. And it's just a good way to make sure you haven't done anything wrong. And so that your wages expense, your HMRC payable, your pension payable, and what's actually left the bank account does actually all balance off and does actually work. So that's how we use a wages managed control account here. And it said it should clear down to 0. That was the entire point of it. Okay, but otherwise we are left with what we want and what we'd expect to see.